The world is becoming more volatile by the day. Global markets are on edge, geopolitical tensions are escalating, and the financial system is showing increasing signs of strain. This past week, 5 major stories have dominated the landscape, and we're going to take a look at them today. The running theme: uncertainty. Governments, institutions, and investors are repositioning themselves for a world where financial and political stability is no longer guaranteed. Gold and silver are increasingly viewed not just as hedges against inflation, but as strategic tools of economic security. The US dollar, long the bedrock of international finance, is under pressure from multiple directions, and Trump's policies, whether on trade, war, or foreign relations, are accelerating these shifts. Let's break down the most important developments. First up, the Trump effect. Trade wars and protectionism are back. The U.S. China trade war is back in full swing. Washington has imposed a 20% tariff on Chinese goods, citing the fentanyl trade as justification. Beijing immediately retaliated, slapping its own tariffs on American imports and ramping up defense spending, as well as the rhetoric. What we're seeing isn't just a repeat of the trade war from a few years ago. It's a more dangerous version, where tariffs are being used not just as economic tools, but as political weapons. This has massive implications. History tells us that trade wars rarely lead to prosperity. The Smoot-Hawley Tariff Act of 1930 helped deepen the Great Depression by strangling global trade. And we don't even have to go back that far. Trump's first trade war with China back in his first term disrupted supply chains, raised costs for American businesses and consumers, and forced the government to bail out struggling farmers with subsidies. Protectionism weakens economy, and yet it's being pushed harder than ever. The result? Rising costs of goods, greater market volatility, and investors seeking refuge in assets that aren't subject to political whims, gold and silver. This trade war is already having ripple effects. The global financial system thrives on interdependence, but policies like these create fragmentation, forcing nations to turn inward. The US wants to maintain dominance, but these actions are pushing other countries to explore alternatives to the dollar-based financial system. And that brings us to what may be an even bigger story: the dollar's struggles. Are we witnessing the start of de-dollarization? Well, when tariffs go up, the dollar should theoretically strengthen, and instead we're seeing the opposite: signs of weakness that major financial institutions are taking seriously. Deutsche Bank's George Saravelos points out that erratic US policies and growing fiscal tightening are undermining confidence in the dollar, and the Financial Times suggests that institutional investors are beginning to contemplate a world where the US is no longer the center of global finance. Historically, the dollar has been the ultimate safe haven in the eyes of governments, but in times of crisis, investors have flocked to it. But now we're seeing something different: rising inflation, unpredictable fiscal policies, and an increasingly weaponized approach to trade of making other assets, gold and silver, more appealing as long-term stores of value. Katie Martin from the FT highlights how Europe is slowly positioning itself as an alternative financial hub, while discussions about alternative reserve assets, including those central bank digital currencies and commodity-backed financial instruments, are gaining traction. The US is still the dominant player, but history shows us that this kind of dominance, it doesn't last forever. The British pound was once the world's reserve currency, until it wasn't. If confidence in the dollar continues to decline, well, what replaces it? Right now, there's no clear successor. The euro remains fragmented, and China's yuan lacks full international trust. But one thing is certain: gold and silver don't require government backing, and that's why central banks continue to stockpile them, and while the conversation about a potential revalue of US gold reserves is becoming more and more relevant. Speaking of gold, what's driving the market? Well, gold's price movements have stabilized, with supply constraints easing, and the large-scale movement of gold from London to the US is slowing down. The incentive to ship that bullion across the Atlantic, which had surged due to trade concerns, is now diminishing. The result? US gold stockpiles are at their highest levels in years, and borrowing costs for gold in London have declined. But what's most important here isn't just short-term pricing, it's the broader shift in how gold is valued. Analysis from IG suggests that gold is now driven more by physical flows such as central bank buying than traditional macroeconomic indicators like interest rates or inflation. And central banks are indeed buying. The World Gold Council reports that 18 tons were added to reserves in January alone. China, India, Uzbekistan, Poland, these nations aren't just hedging against inflation. They're preparing for a world where fiat currencies are more volatile than ever. This signals something bold. Gold is no longer just reacting to market conditions, it's actively shaping them. The world's financial system is adjusting, and gold is playing a major role in that transition. And it's not just about gold. It's not the only metal seeing major shifts. Silver's role in the global economy continues to grow. Silver is gaining momentum, and the trend suggests that it's becoming a more significant financial hedge than ever before. One major indicator, the massive movement of silver out of London and into US warehouses. Over 100 million ounces have made that journey, raising questions about liquidity constraints in London. Meanwhile, India's silver imports have surged 37% year over year, hitting record levels. But why does this matter? Well, the gold to silver ratio is currently at 91:1, far above its historical average of 40 or 60:1. This suggests that silver is significantly undervalued relative to gold. Indian investors are taking advantage of this aggressively. They are aggressively accumulating silver in anticipation of a potential revaluation. However, there are risks. As silver prices rise, demand for silver jewelry and silverware could decline. If the market becomes overheated, we could see some short-term corrections, but in the long run, the fundamentals remain strong. Silver, like gold, is being viewed as this alternative to fiat currency risks. And let's look at Trump's foreign policy, a real catalyst for global instability. Because Trump's handling of internal relations is sending further shockwaves through financial markets. His aggressive approach to Hamas, his unpredictable stance on Russia, and his willingness to disrupt long-standing alliances are all contributing to a world that is more volatile than ever. Trump's latest move, threatening Hamas with extreme consequences while simultaneously signaling openness to Russia's influence, highlights just how erratic US foreign policy has become. The Guardian reports that Moscow sees this as an opportunity to reshape global power structures, while The Telegraph notes that Trump's America First stance isolates those traditional allies. It's weakening the Western-led economic order. So what's the financial implications of all this? More uncertainty, more market volatility, and more capital moving into gold and silver. Where are we headed? Gold is shifting hands between major financial centers. Central banks are stockpiling at an accelerating pace, and silver is seeing record demand from key markets like India. Meanwhile, Trump's aggressive foreign policy and protectionist economic moves are sending shockwaves through global trade and financial markets. The dollar is struggling to maintain its status as the world's go-to safe haven, and the idea of de-dollarization, once dismissed as unrealistic, is now a serious topic of discussion among global investors. This past week has made one thing abundantly clear. Global stability is deteriorating. Trade wars, de-dollarization, shifting alliances, and financial uncertainty are all converging. Central banks are responding by stockpiling gold. Investors are moving into silver and gold, and even governments are considering a potential realignment of financial assets. We're entering a new era. The question is, are you prepared? Gold and silver have withstood every major economic and political upheaval in history. And as we move deeper into this very uncertain territory, they remain the assets that offer real stability in this unpredictable world. So let us know what you think. Click subscribe, get involved in the comments, and let's keep the conversation going.